The SEP IRA allows business owners to deduct up to $58,000 and put that money towards retirement. Now this is huge because this is thousands of dollars more than the $6,000 contribution limit that a standard traditional or Roth IRA account allows you to deduct. So if you're self-employed, earning income, and not taking advantage of the SEP or solo 401k, get ready to cut your tax liability and save more money for retirement. Welcome back to the channel, everyone. My name is Sherman, a CPA here at Life Accounting, where we help you save on taxes and boost profits in your business. Today, I want to help you do this by taking advantage of the SEP IRA. By the end of this episode, I want you to know everything about it so you can start reaping the tax benefits as soon as possible. And if you're new to our channel, then trust me, you don't want to miss another video that can help you save more money in your business. So go ahead and hit that subscribe button below and like this video. With that said, let's discuss the SEP IRA. All right, so what is a SEP IRA? A SEP IRA, which stands for Simplified Employee Pension, is a simple plan that allows employers to contribute to individual retirement accounts. SEP IRAs came about as a way to provide an easy way to set up retirement accounts without all of the startup and administrative costs that comes with conventional retirement plans. For example, other retirement plans have annual filing requirements, require a ton of paperwork, and can cost an arm and a leg to administer. There are also normally setup fees, management fees, administrative fees, investing fees, and so much more that goes into these other accounts. But SEP IRAs are not as costly. Vanguard, for example, charges no setup fees and a minimal $20 fee for account services, which also can be waived. So that's what a SEP IRA is. But what are the benefits of a SEP IRA? More importantly, why should you consider creating one? As if the benefits of compound interest and saving for retirement wasn't enough, there are some major tax benefits of starting a SEP IRA. The maximum contribution limit is adjusted annually, but at the time of this video, the biggest benefit is that you can contribute up to 20% of your self-employment income up to $58,000. And the good news is that your contribution is tax deductible. So if you ended up contributing $58,000, then that will lower your taxable income by that amount, resulting in lower taxes for you to pay. So in short, you're saving up to $58,000 for your retirement, which is then compounded by an investment vehicle of your choice, like stocks or bonds. And then when tax time comes around, you can deduct your contributions from your tax liability, putting even more money in your pockets. With the contribution limit of traditional IRA accounts being only $6,000 to $7,000 per year, this definitely makes a SEP IRA an attractive option for self-employed individuals. But let's break this all the way down. Let's look more closely at how exactly a SEP IRA works. So with a SEP IRA, you can contribute 20% of your self-employment income. Your self-employment income is your net income in your business. In other words, revenue minus expenses equals your self-employment income. Therefore, if your self-employment income is $50,000, then that would mean you can contribute 20% or $10,000 to your SEP IRA. And if your self-employment income is $100,000, then that would mean you can contribute $20,000 and so on. So in order to deduct up to $58,000, this would mean your self-employment income would have to be over $200,000. But regardless of your income level, the SEP IRA contributions will likely save you more money than the standard $6,000 traditional IRA limit. For example, if you make $100,000 per year and you can deduct $20,000, that brings your taxable income to $80,000. Let's say that you're in a 20% tax bracket, which would mean you would save at least $4,000 by investing that $20,000 into your retirement. And if you're not a numbers person, this is all you need to know. By contributing to your retirement, you are paying less money to Uncle Sam and putting more compounding money towards your retirement. And also, it's important to note that your self-employment income is treated differently than W-2 income. While contributions are limited to 20% of self-employment income, if you are receiving W-2 wages from your business, then you can bump that percentage up to 25% of that income source. So that means if you're making $50,000, you can contribute $12,500 or $25,000 if you're making $100,000 in W-2 wages. Anyway, that's how contributions work in a SEP IRA. Now let's look at some pros and cons. As stated earlier, the pros of the SEP IRA are the high contribution limits, tax benefits, and the ease of administration in comparison to a lot of the other options. But to be fair, we should look at some potential cons that may come up with a SEP IRA as well. Number one, if you have employees, you have to equally contribute to their IRA plan as well. But if you are a freelancer, contractor, coach, consultant, or any business where you are the only employee, then you don't have to worry about any of that. Instead, you get all of these tax benefits for yourself. Number two, there are no Roth contributions with a SEP IRA. Many IRA plans have the ability to take advantage of Roth, meaning that you invest after-tax dollars into your plan. However, SEP IRAs are limited to traditional IRA investing. Number three, you cannot take loans from a SEP IRA. While other IRA options do allow you to take loans from your account, a SEP IRA does not. Remember, the SEP IRA is all about simplicity. So unfortunately, this is another feature that is just not possible within this SEP IRA framework. So anyway, if you are not investing any money into your retirement right now and you're operating a business, then you're probably leaving some money on the table. And you'd be paying your hard-earned money in taxes, which could instead be used to save on taxes and build wealth for retirement or other things. A SEP IRA is a simple, low-cost way to do this. It's simple to set up, low cost, and has high contribution limits that makes everything worthwhile. But if you want some of the features I mentioned earlier, like the ability to take Roth, the ability to take loans, or even higher tax savings, then you should consider looking into what is called a solo 401k. A solo 401k is a more sophisticated version of a SEP IRA with more features, but also adds some more complexity and some more cost. So to learn more about that, go ahead and subscribe to this channel right now so you don't miss out on my next video on this value-packed topic. And by the way, if this video helped you, go ahead and let me know by clicking that like button below and let me know what you're thinking in the comments. That's it, folks. I'll see you in the next episode.